I want to take a few minutes to go over the current results in our members portfolio. I'm not going to update these videos that often, probably. I just want to talk about it every once in a while to let you know how we're doing on the members portfolio and to kind of give you an idea of what it should be. Right now it's still running a little higher than typically, and we'll go over that. So we're going to go to the link here. And you can see from, the very first update I did was the second week of January, and we were showing an annualized return of about 69%, which was high because I had a lot of trades we just entered in January. Some of them closed very quickly, so I didn't have a lot of days in them. You see, I had about 5 days in them. That's why this annualized return was so high, and it continued into the 20th. We had a lot of short-term trades closed. We had a lot of long-term trades that were still open. In fact, we still have some very long-term trades that are open in the portfolio. And you can see as each week has gone by, the average days has gone up, and that's because some of the longer-term trades have started closing. And as a result, the annualized return's coming down. My target for this is about 15 to 20%. That's what I'm trying to get out of this portfolio, trying to keep the trades as conservative as possible. The amount we win versus loss is right here. And as long as this is above 1, that's great. If it's 2 or more, that's wonderful. 1.5 is good. When it drops below 1 is where it becomes a little more of a problem for me. Win rate here, and I see I've got this one in wrong. I put the percent sign here. I need to correct that. The win rate here, this is pretty standard. I mean, the 66.75 is low, but that's because, again, we had some very short-term small trades closing very quickly. I try to shoot for 80 to 90%, but again, to get that high of a percent return, or percent profitable, you're going to have a lower annualized return because I'm taking less risk. There are traders out there that can, be 50% profitable, but maybe they have a 5 profit loss ratio, and they make a lot of money in a very short period of time. I do trade that way sometimes. I do have certain portfolios that I run that way. That's not the goal of this portfolio. This portfolio is designed to be conservative. It's designed to have a lower annualized return, but a higher win rate. Again, that's because I personally don't like taking losses. So, if I get a little bit smaller annualized return, but I don't have much drawdown in the account, and I have a high win rate, that makes me pretty happy. And that's what this particular this particular portfolio is designed to do. As you can tell here, we're using covered calls, cash secured puts. I haven't traded any iron condors this year. I haven't traded any butterflies or calendars yet this year. I have done a lot of strangles, a lot of covered calls, and a couple of cash secured puts. Over the course of the year, that we will probably use all of these. The calendars tend to have a decent profit loss ratio, but the win rate is not as high on them. So I'm a little careful of how I use them. The covered calls, cash secured puts, and the strangles have much higher win rates. Iron condors can, just depending on how they're used, and there's a lot of different ways to use butterflies and diagonals. Diagonals this is typically a directional play, where a lot of my others are not really, because of the way I trade them, they're really not directional plays. A lot of people would argue that a covered call cash secured put is a directional play, and I guess it is fundamentally, but I typically am very conservative about my entries. So they don't really trade. They don't trade that way as much to me. I try to keep that delta more neutral, and as long as it doesn't have a big bottoming out, I'm usually okay on those. And then the strangles are strictly time and volatility plays. But overall, the portfolio is performing like I expected it to. I'm trying to maintain this risk per trade at around 4,500, under 5,000 anyway. I'm going to try to keep this profitability rate between 80 to 90. That's my goal. Don't pay as much attention to this. This is the percent return on risk per trade. So I really don't pay that much attention to this one. I'm more concerned with the overall profitability percentage and then the annualized return. Average day is also not that important to me. I imagine this will begin to creep up just a little bit because a lot of my strangles and covered calls are based on 21 days. So this may creep up a little bit. unless I change the way that I'm trading and use more diagonals or something like that. But right now, I'm not planning on doing that. Again, I expect the annualized return to continue to move down some, average days continue to move up some, and hopefully this profitability percentage stay in the 80 to 90% range. That's my goal for a portfolio. So far, we're doing it. So far, we had good success. No major drawdowns yet. We probably will have one. That's just the way this works. When you're trading, eventually you can expect to take a loss, and we just try to limit what that is so that it doesn't hurt the portfolio very bad. If you have any questions, let me know. Please put it in the comments, and if you have any questions, like it and share the video. Subscribe to the channel. Please check the website out. If anything else, just let me know. Thanks.